Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk this afternoon, we have Tanya Van Court, founder and CEO of Goalsetter, Dave Goldman, Chief Business Officer at Pontera, as well as Katherine Frattarola, Head of Hub Private Client, to discuss the evolution of financial planning and wealth management and the impact of technology in this space. It is great to have all of you with us. Welcome to Trade Talks, and I want to set the baseline here. Let's discuss some of the macro and key events that took place in 2023. Tanya, we'll start with you, that impacted your clients in the business.
Well, I think the thing that we saw is that the great wealth transfer is not just something that people are talking about in the future anymore. They're seeing it happen. They are seeing that these estimates of $84 trillion moving into the hands of the next generation and or of women by 2045 is actually real. And so wealth management firms, financial advisory firms all need to start paying attention to the entire family in order for them to have a viable business in the next 10 or 20 years.
Right. And Dave?
Yeah, as a technology platform that serves financial advisors, we've been hearing the theme of inflation over and over again, and it's creating a concern for retirement. So we're seeing advisors really work to help create relief from inflationary pressure by making sure they're managing the client's assets, doing it holistically, and making sure they set them up for retirement.
And Katherine, you bring interesting perspective because Hub represents ultra high net worth individuals. What are some of the concerns, some of the issues that impacted them this year?
Well, I think actually the issues and concerns even predate last year and extend over the last 18 to 24 months. We've seen a significant amount of inflationary pressure, both on labor as well as pricing of goods. So as homeowners contemplate rebuilding homes in the event of a loss, it's much more expensive than it once was. We've seen the increase in severity and frequency of storms, and that's played a meaningful role. In the first half of last year, we saw 23 storms and over $1 billion in losses that were paid out. Our clients like to live where the earth burns, the wind blows, and the ground shakes, right? So increasingly, the severity and frequency of storms is becoming a bigger and bigger obstacle to getting the right coverage and paying for the right coverage. And then thirdly, we're seeing the cost of personal liability payouts really escalate. And at the end of 2022, it was continuing to increase north of $50 billion in payouts, which is very, very significant.
Let's discuss the convergence of wealth management and retiring planning. How have you seen that evolve?
Well, I think wealth management in general is now something that needs to be holistic, and it needs to include retirement planning. It needs to include the next generation, and obviously Dave can talk specifically about retirement planning. But retirement planning and the next generation really do go hand in hand. A large percentage of assets are now in retirement vehicles, and people need to pay attention to those retirement vehicles themselves. And in many instances, they don't know which decisions to make because they don't have the financial education, and they've never gotten it, their kids have never gotten it, and so you are putting them into the wild, wild west with respect to either their overarching portfolio or to their retirement assets. This financial education piece is a key factor now. We just did a research study at Stanford, Harvard, and the University of Pennsylvania. We gave about 340 students a financial education quiz with high school financial education questions. They included questions like, how much should you have saved for retirement by the time you're 30 years old? These kids got under 50% of these questions right. So if we're not teaching them in schools, if we're not teaching them in college, then they certainly don't know about retirement planning when they get out and get their first paycheck. And that's why wealth management firms need to pay more attention to their clients and need to pay more attention to their holistic approach towards the entire family and retirement planning. And I'll throw to you, Dave, on that note.
Yeah, we're seeing a lot of the same. I think it's coming from three places. The first place is the wealth advisors are being asked by their clients for help on their retirement assets, which historically have been underserved or not supported by those wealth advisors. So those assets have fallen behind and have become a meaningful opportunity for wealth advisors to really grow their practice and serve their clients. You're seeing the same thing from the retirement plan advisors, where they're working with the plans, they're working with the sponsors, but the participants need individual help. So they're getting requests from the individual participants. The third catalyst here that's really driving things is, if you look back to 1975, defined contribution plans were 2.5 times the size of, defined benefit plans, were 2.5 times the size of defined contribution plans. that means that the retirement saver could kind of set it and forget it. They don't have to worry about their own retirement, right? Moving forward to today, 7.5 times the size, the DC market to the defined benefit market. Now the onus is on the individual to manage their own retirement. If they're lacking the financial literacy to do so, they need an expert to help them do that. So the financial advisor reaching in and helping with those important assets, providing a holistic and comprehensive plan and executing on that really sets them up for success and really shows what's happening between the convergence of wealth and retirement.
And I would argue that risk management education and planning is a critical piece of the equation and the conversation, as well as the deficit in training. As this younger generation grows in sophistication and their complexity surrounding their lifestyle, as their wealth grows, either because they've inherited it or because they've made it themselves, their changes to their risk management strategies often aren't keeping pace. We recently did a study in advance of 2024, our Outlook annual report, and found that while 90% of high net worth and ultra high net worth consumers felt confident that they had a risk management plan that was consistent with their needs, when you actually look against the backdrop of what I shared previously, whether it's liability or the inflationary pressures around costs of goods and services, whether or not it's the weather-related events, their plans haven't kept pace, meaning that they're undercovered. And because they haven't been educated previously, they don't even know what questions to ask. So working with a knowledgeable broker who employs a consultative approach and will work hand in glove with other outside advisors is really mission critical to ensuring an effective asset management strategy.
So regardless of what end of the spectrum you fall on when it comes to wealth, you're going to need expertise there. I mean, think about it. I don't want to sound like get off my lawn, kind of, like I'm sounding old here, but think about, a younger generation where they've grown up where everything is like point, click, it's on your phone and it's done. I'm guilty of doing it. It's so much easier to purchase things that way versus when we were younger, it was a physical check. You had to save your cash. You had to you had to literally physically see it and budget things out. And I think, while the advancement in technology is great and, you have accessibility to cross-border payments and ease of use, and there is something lacking there, and it's not being taught in the American education system either. So and if the parents don't have the education or enough of a background to speak about it, the industry really does have to step up here.
The industry absolutely has to step up, because if the industry doesn't step up, we all lose, right? Go Banking Rates has a study that talks about the fact that 70% of wealthy families are expected to lose their wealth by the first generation, 90% by the third generation, or I'm sorry, by the second generation, 70% by the second generation, 90% by the third generation. And so we are looking at families that are working with financial planners for their entire lives, and they are confident that they are going to leave their kids in good stead. And guess what? Those kids are running out the door. They're not planning for risk appropriately. They're not looking at their entire portfolio appropriately. And as a result, they are losing vast majority of their wealth. And guess what? They're not the only ones who are losing out. Their financial planners are losing out, and the wealth management firms are losing out. When you don't make a connection with that next generation is largely either doing it themselves. Hey, I can do this with that point and click technology that you just talked about, Jill. I'm just going to go to Robinhood and do it all for myself.
That was easy to do when the market was going from the bottom left of the chart to the top, the right of the chart for 10, 15 years. But when you get volatility back in the market, whether it's from a macro perspective or just isolating the stock market, things change.
Absolutely. And so they are either trying to point and click and then realizing very soon after, uh-oh, I'm in deep water. I may need some help being in that deep water, by the way, Katherine. Or the second thing that they're realizing is, uh-oh, I may need that financial advisor. But only 13% of wealthy people are working with the financial advisor that their parents worked with, because they were never introduced to that financial advisor. They never made a connection with that financial advisor. And so even when they do seek help from a financial advisor, they're moving away from the one that their parents grew up with, because that financial advisor hasn't figured out how to holistically serve the whole family.
Let's marry those thoughts for a moment here. Dave, what about the impact of technology on financial planning? I feel like this is one piece of financial services where there's still some catch up to be done.
Yeah, and I think a lot of it comes back to what Tanya was saying, which is holistic and comprehensive wealth management, right? This has been a buzzword for the last decade. People have been talking about it. You're seeing a movement to it, right? Making sure that when they're putting a plan together, they're using technology, they're bringing in all of the assets, they're doing goals-based planning. Advisors are thinking about what the client needs to retire, what they need to pass to the next generation. technology has a meaningful opportunity to piece all these things together to incorporate the insurance element, the retirement element, the spending element, and put it all together. So I think we're going to see more meaningful integrations, more meaningful capture of an entire portfolio, and holistic planning come to fruition after talking about it for so many years.
And increasingly, we're using technology to deliver insights and educate our clients and make them smarter around their vulnerabilities so that we can better inoculate them against their risks. So we're increasingly using wildfire data. We're increasingly using flood data in order to be able to map out over a sort of forward-looking time plan how their risks could evolve as a result of things like climate change. That when we design a strategy today, we're not only designing for today in mind, but we're looking in the future. And again, working very closely on a consultative basis with outside partners in an effort to do that effectively and holistically.
The thing that I love about delivering clients better technology and more technology is that it actually gives them what they want more of too, which is more people and more human interaction, right? The more that financial planners and advisors can automate, the more time they have to actually spend giving advice and, you know, personalizing that relationship and the advice that their clients need and are ultimately looking for. We're partnered with Envestnet. They did this fascinating study called the Intelligent Financial Life. And the Intelligent Financial Life essentially says, when you marry technology and the human touch, that's actually when you are giving clients what they need and want the most. And it is not just the technology-only approach.
And I was just going to add to that, and that's the misperception with the high net worth and ultra high net worth consumer, that technology is more for the mass affluent individual, but it's increasingly, if not critically important, to deliver that high touch, personalized experience that this level of client segment expects and also demands.
Yeah, and I think AI has been such a hot topic recently, right? So there's a concern from some contingencies of the market that AI replaces financial advisors. I think what you both said is true, which is that it actually empowers them to be more efficient, to spend more time with their clients and to really deliver value, and maybe leave some of the back office tasks or some of the menial jobs to AI to take over.
And the interesting that we've found, to your point about, you know, there's this misconception that, you know, the high net worth don't necessarily need that both the high touch and technology. The same is true with the younger generations, right? Younger generations, they want that personal touch. They don't just want to go entirely to technology. And so they are looking for connectedness with financial advisors and wealth managers who get them, who understand what their goals are, and who can help them to achieve those, but also incorporate technology in their servicing of them.
So when we think about growth potential in the industry here, we have you know, the biggest wealth transfer that's going to take place. And I feel like this is one of the more opportune times to achieve some of those goals with being able to connect with your clients in a different way.
Absolutely.
Absolutely.
Yeah.
Yeah.
With Goalsetter, you know, so we are a platform that is a saving, financial education and investment platform that is created especially for the next generation. And what we've found is that financial advisors and wealth managers are saying to us, thank goodness you were here, because we are getting these requests all the time. Our clients are asking to bring their kids into the office so that we can teach their kids these topics about financial education. One, I don't have time. Two, I'm probably not the best teacher for a 16-year-old. Mm-hmm. So to the extent that we can automate the financial education, make it fun and engaging for the next generation, and give it to me with a white label version where I can put my name and my brand and my stamp on it and create a connection with that next generation, it's a win-win-win for me. It saves me time, it allows me to create connections with the next generation, and it satisfies that client's needs to have financial education for their whole family.
Mm-hmm. And at Hub Private Client, you know, core to our service experience, it's really rooted in advice and counsel, and having technology to be able to more effectively and personally be able to deliver the insights. It's just an augmented part of our service offering. You know, technology allows us to be able to educate our clients in a way that traditional conversations can't necessarily do. It's completely illuminating to our clients as we sit down with them and design a risk management strategy to be able to lead with insight and lead with that data.
It's just hard for me to wrap my head around how someone would not access advice going through an estate transfer exercise, which it's a lot to process. It happens very quick, and there are a lot of nuances, whether it's on the financial legal side, the tax side, of course. I can't imagine why someone wouldn't at least want the human element in there as well.
100%. And we see the same thing. I mean, since Pontera enables advisors to manage their clients' 401ks, we see the next generation come in as well, right? When a son or daughter of a wealthy family comes in and their only asset or their largest asset is their 401k, you want to make sure that they have something tangible that they're engaged with. And so when the advisor comes down and sits down and works on a family plan, it's making sure that you're finding ways to bring the next generation into the fold, making sure that their assets are part of the entire plan. And it gives you something tangible and meaningful to engage the next generation with in terms of growth and opportunity for the future.
Out of curiosity, do you partner with legal experts, tax experts to create these plans?
Absolutely. I mean, we work very closely with wealth managers, with tax trust and estate advisors. I like to think as private client risk advisors as a third leg of the stool, where we're an equal part of that conversation, because at the end of the day, we have a shared mission, which is to preserve assets. So if risk isn't an equal component of the asset management conversation and strategy, it's a real missing link. And as you think about the next generation, not only do they have to get up to speed on understanding, in some cases, the sheer magnitude of the wealth and how to be a good steward of wealth, they have to understand, how to adopt prudent measures to ensure that they are inoculating themselves and their families, from vulnerabilities. So that's a conversation that's best served and best had when all of the advisors are sitting around a table together, holistically developing that plan.
And in the last few minutes here, when you think about your 2024 outlook, how do you see the financial planning and wealth management business evolving into the new year?
I think for us, we continue to see volatility in the personal lines marketplace as a result of some of the factors that I shared earlier today. It is our mission to be our client's best advocate, to work on best developing a plan that suits their needs and finding the best market to deliver those solutions. So, and it's against that backdrop, and that's really where we excel.
And Dave, as a technology provider, how do you see this evolving in 2024?
Yeah, I think you'll see, if there's increased volatility in 2024, you'll see a flight to advisors and to advice. In 2023, the S&P was up about 24%. People got comfortable, people saw their assets grow, and maybe pulled back from advisors a little bit. I think if you see choppiness in the markets, they're going to fly right back to advisors and looking for that professional help. So the advisor's ability, again, across the themes that we've all discussed, to manage everything comprehensively and start with this holistic plan and really implement and help guide their clients through potentially rocky times, is going to create meaningful long-term outputs for their clients.
Yeah, which is interesting because in the asset management business, we've seen an uptick in active management versus just passive indexing. So it kind of works hand in hand there. And finally, Tanya, last word to you. How do you see this evolving for 2024?
I see a bifurcation of the advisors who are out there and the clients who they will be serving. So with the great wealth transfer that's happening, the money is not only going into the hands of the next generation, it's going into the hands of women. And if women feel like they are not being served with financial education, if they feel like their children are not being served and prepared for that generational wealth transfer with generational knowledge, they are going to go elsewhere. And so there will be places that the money leaves, and there will be places that the money lands. And the places that the money lands will be the places that really demonstrate that they are family finance focused and that they are financial education focused, because there's so many people out there who are lacking the knowledge but don't want to raise their hands. There's a degree of shame associated with that and say, I don't have this knowledge. And so technology can be the tool to democratize that knowledge, whether we're talking about democratizing it amongst the mass affluent, or we're talking about democratizing it even amongst the high net worth clients that we serve.
All right, we appreciate the insight. Thank you for joining us on Trade Talks, and thanks for joining me from the Nasdaq market site. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.